JB here. Hope everyone's doing outstanding. September the 3rd, 2024, 3:04 on this Tuesday afternoon. Talk really quick about the market, some names I'm looking at, and then some of the catalysts for the rest of the week. But uh, market's under pressure today. S&P down nearly 2%, Nasdaq's down nearly 3%, small caps down nearly 3%. No big catalyst to speak of. There was the ISM manufacturing number out. People will cite that it came under 50, which it's done before. So I don't think it was any surprise, but they'll use that as a headline to rationalize today's move. That big spot on the SPY, I kept talking about 555. Nice round easy number, was tough resistance on the way up, and was strong support on any kind of pullbacks, and then that finally broke today. Same on the IWM, the small caps. 215 was a strong support on the way down, strong resistance on the way up, and that cracked today. We'll see how the end of the day goes. We're 553 here on the SPY, with nearly 214 on the IWM. But now all of a sudden you have headlines, people talking about, oh, watch out, historically volatile period of time. Uh, if you know Tom Lee, so Tom Lee, he Fundstrat Global. I forget who he used to be a couple of years ago, or I think he started his own firm or what have you. But he was the most uber bullish person that would ever. He would go on CNBC. He would everywhere he would go, he'd be bullish. And I mean, if you've been bullish over the last 15 years, you've been right, right? I mean, Dow just hit all-time high, closed at all-time highs on Friday. So a lot of folks now like to cite him for information. I forget what he said couple months ago when the CPI number came in and the small caps started to go on a tear. He says, I think small caps have 30 to 40% upside, whatever it is. But now you have headlines, and the headline says investors should be cautious for the next 8 weeks. And of course, those headlines only come up when the S&P is down nearly 2%. I mean, it's all the ingredients are there, right? We're historically volatile period of September, October, historically poor performing period of September, October. We have a lot of different catalysts in a way. We have the Fed meeting in 2 weeks from tomorrow. We have a jobs report on Friday. We also have it's an election, so we have that kind of volatility in there as well. Or I mean, depending on how that race pans out, everybody remembers. Uh, 8 years ago, there was uncertainty, right? And it wasn't uncertainty. The polls showed one direction and it came the other direction. And I remember futures were limit down, crazy, and then they reversed course and into the green. I'm not saying the similar thing is going to happen here in November, but we're just setting up for some positioning. And not only that, the market's up so much this year, but. I'll still, I'm cautiously optimistic. I would have loved to see the SPY hold 555, but that didn't happen. So when that doesn't happen, you got to try and take your emotions out, right? And that's why I have support resistance levels where I look to get hedge positions, and that's what I did today, and that's what I've done over the last couple months, and that helps not only hopefully make money, but then offset some call positions that may go in the wrong direction. So that's kind of the thought process here today. I would love to see the SPY close over 555, but it's almost like I feel like it it almost we need like a kind of washout. We need to get some of this sentiment out. Maybe we drop into the 548 range. 50-day moving average is right there. So, I mean, I would love to see that hold and then maybe a bounce. Uh, we have the JOLTS report tomorrow. So job openings, which wasn't a big data point 8 to 10 years ago, all of a sudden is a big data point. And then the jobs report on Friday. Those will be, and then the weekly jobless claims. Those will be the big catalysts. And we have Broadcom earnings on Thursday. So we'll see how all these things play out. But same with small caps. You take a look at the IWM, and why do I have this? Oh well, that 215 handle and the 211.88 on the IWM is a huge support resistance. So we'll have to see if that holds. And then last but not least, I just posted this in the chat room before. A little kind of like an indicator. So back when we were having a pullback, I don't know if it was in end of June, I was looking at the number of stocks over their 50-day moving average on the S&P, and 2 days ago, 82% of the stocks on the S&P were over their 50-day moving average, which is we haven't seen that since late March. And then now we're seeing it pull back. Now it's 72%. And considering where we are, and you start looking where we were at July 16th, we were at 70% of the stocks over their 50-day moving average on the S&P. So definitely something I'm going to watch over the next couple of days, because if we start to see that start to tick down, yeah, maybe we're going to get. So, I hate to quote Tom Lee of Fundstrat Global Advisors, but maybe we're going to get a 7 to 10% pull. And I don't want to put my bear suit on just yet. I'm not. But at the same token, I'm going to get some hedge puts to protect myself from possible more downside. So that's that. So individual names, Redfin, I mean, monster open all the way up near 11 after the bell rang. B. Riley upgraded the stock from neutral to buy, raised their price target to 13 from 750, and looked like that was it. It was ready to go, and then the market starts pulling back, and Redfin just fell in tandem with it. Still in the green here, considering where the small caps off nearly 3%. It's I guess they take that as a win, but hopefully, it can hold its ground here if the market finds some footing, gets back over $10. Still holding freebie September, November strikes, still looking for some possible strikes to play for more upside if the market holds. And you kind of pull in the chart a little closer, it actually doesn't look too bad here. I mean, all things said with last week's pullback, nice little candle. Hopefully that holds. So that's Redfin. Clear Secure still have that bull flag setting up, but it's closing on the $30. Still only down 2%. I say only. Typically, this name moves a little more to the downside when market has some weakness. So again, similar to Redfin, I take that almost as a good sign. Maybe if it holds 29 or so in the next day or two, then it could start to work constructively back into the mid 30s. Still, I closed the last of those 29s on Friday for some profits, and I say thankfully, but you never know what's going to happen. And then add some of those higher strikes, and I might look for some more strikes to play for upside. And then on the flip side, so downside, so back in EMVX puts, and I've done rants and haven't tried to talk too much about it, but it's kind of back. I have to look where I got puts back. I don't know if it was May or June when when it came to my attention, I started getting puts. It might be below the levels when I first started getting puts, but it almost looks like pending any crazy catalyst, like it maybe gets to $6. Uh, I mean, I look at it and I can try and figure out a valuation. And when I'll use a biotech as an example, when they're in their early stage of a drug, they're just in phase 1 studies. They have cash on hand, but they're burning through cash to do R&D, and then you have to figure out if they do the drug gets approved in a couple of years, how much is it going to cost to bring it to market and do all the FDA things and the filings and all. So similar EMVX, I wouldn't call it a biotech name, but it's still early stage of being a company that's possibly going to produce batteries for phones, right? And other products, so they say. And you start looking, and it's like, okay, so uh, what's the valuation, even if they're able to execute at a high level? And you start looking at some of the other names in the space and competitors and possible, Samsung and CATL, I guess the other competitor, solid state drives. There's all these other moving parts that I'm like, it's tough for me to see this unless their technology is really best of class and substantially superior, and they're able to scale. Okay, maybe it demands a higher market cap, but like, what's the margin on batteries, right? For phones, it's like 15-20% tops, and then that's just the cost of you producing and the how much you're charging the supplier, right? So I mean the OEM company, the Samsung or the Apple, whoever it is. So then you take that 20% and you still have debt, you still finance it. There's all these things that go on behind the scenes. Like, anyway, so I added some September puts. I might look for some October 7s. I was looking at that strike, but I thought the September's offered the better risk reward, so I'll just hold on to those. That's my quick rant on ENVX. And then the hedges, and I put those on the watch list like I've done over the last couple of weeks, especially when the market is nearing support. We're an area where, hey, if it breaks this, I'm going to get some hedge puts. ServiceNow, LR, Lam Research, and Broadcom. The issue is Broadcom reports, so the premiums are a little more elevated, a little tough to play on a risk reward basis if you're looking for some speculative hedge puts to protect the position. Uh, I'll just hold those. I mean, there's only 45 minutes to the close. If I can get them out for a double before the close, if things accelerate to the downside, I'll look to lock some of those in to cover costs. But I'll probably hold them overnight as a hedge and go from there. So that's LRCX. You look at Lam. It was 725 at the start of August after was it, ASML had bad earnings, and then even Lam Research had some cautious earnings. heads back to 700 bucks. If things accelerate, if there's a follow through tomorrow and weakness continues into Friday, jobs report doesn't come, it's a weak jobs report again. I, not saying it gets to 700, but it gets to 730 or so. My puts will be up enough to cover costs and some profit and maybe ride some freebies. ServiceNow, similar. I was looking at the ServiceNow puts, and the the stock was green, right near all time highs. I think it was 860. Was it 860? 863 it hit today, and then a reverse course. The minute I go take a look again, I'm like, uh, but you look, the 50-day moving average, seven is it 792? Um, wouldn't take much. And the thing is, the premiums on the options, they're not factoring in any kind of substantial move because it's not a name that typically moves a lot. So I think there's an opportunity for some nice profits if the market doesn't hold ground here. So I think that's it. That's enough of my rant today. If anything else comes up, I'll do another rant later. Let's have a great rest of the day. Rock and roll.